Let's look at a cruise company. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We will look at an economic signal that I have called Euphoric Spending. So if we look at the companies in this watch list, you can see that they offer stuff that is, it's delicious, it's entertaining, but it is not something that you absolutely need. You do not need a Porsche. You don't need clothes from Ralph Lauren. There are cheaper alternatives. And these companies, they offer things that are very discretionary, which also means that when these stocks begin to go down, they can be an early indicator of consumers losing confidence in their future prospects. Okay, so we will look at Royal Caribbean Cruises in this video. They are the top performer vis-a-vis the 52-week low, and pretty decent even when it comes to the 52-week highs. As you probably are very well aware, the cruise line business has been hit particularly hard by this whole lockdown situation. It's a really bad situation really for the cruise lines because you are in this floating box. It is basically a worst case scenario as far as a pandemic goes. So that is just something to consider. Because there are of course ways for these companies to adapt themselves to the ongoing situation, but it's a tricky setup. If you go here to the seasonality, we can see that it's basically is 50-50 going forward. We don't have any strong seasonality until September, October, and November, and that is towards the bullish side. But anything else is 50-50. If we look here at the charts, this is all the history we have here. And something that I do find a bit striking is that we recently were all the way up here to the highs of 2015 and 2015. I find it very hard to believe that the situation here after the lockdowns and all of that it was as bullish as it was back in 2015. I don't buy that. That sounds absolutely ridiculous. We can see here that this stocks, it definitively moves in waves. And here you can see that if you look here at the financial crisis, it started to deteriorate long before the total plunge. So in this situation, it certainly functioned as a bit of a leading indicator. We can see that during the uncertainties of 2010, 2011, when there was a lot of concerns about the European Union, here again, the stock reacted negatively. So basically, we know for a fact that this stock is very sensitive. It can have huge rallies, but it can also have very dramatic sell-offs. There's been a very impressive rally from the lows here. What is interesting is that you can quite clearly see that this stock, it moves in these cycle brackets. Based on the cyclical nature, there is reason to suspect that the current cycle it has likely spent a lot of its energy. If we look here at the weekly RSI, we have been more overbought in the past, though we do have a very key resistance level right above us that is very likely to limit a further rally. You have the 200-week moving average, which has been important here, as you can see in the past, as a support level, and what was once support can quickly become a resistance. You also have horizontal resistance levels as well. You can see here that there is a 69%. Well, that is the 10-year. Let's remove the 10-year. Let's get the SPY here. S&P 500. Okay, so here you can see that there is a minus 30% negative correlation with S&P 500. If you go here to the daily data points, minus 30% negative correlation here long term with S&P 500. So that is certainly something to take into account. But when we look here at the daily data points, we all of a sudden have a 73% positive. So there's a pretty big difference here between the long-term correlation and the shorter term. When we look here at the daily data points, and we look here at the PPO and the RSI, which can be very interesting indicators to use, especially combined to identify oversold or overbought levels. The RSI level we are at and the PPO are definitively high-risk situations here for the bulls. If you look at the history, it's very rare for us to get that far above. The only prior time where we were higher than we were at these highs, that was back here after the global financial crisis. But in that situation, you had, a long, gradual repricing of the stock. So it was a very different context and definitively different price level than what we have here. So basically, the current rally is arguably one of the most, if not the most euphoric rallies we've had in this stock, especially given the context. So that is the technicals. So the bulls are in control as far as the momentum goes, the short-term momentum. But looking at a much bigger picture, you could start to argue that maybe this is starting to become a very risky situation here for the bulls. Looking at Finviz, they also draw this resistance. They draw a channel. So you have resistance here, rejection. If we look here at the analyst price targets, you can see that there's been a plethora of downgrades. So there's definitively been some bearish changes, and this is now after the lockdown. If we calculate the difference between the analyst price target and the current price, they suggest a minus 20% downside. When we go to Saks.com, a number 3 hold, F value, F growth, F momentum. So that's definitively pretty bad style scores. And the industry, leisure and recreational services, is in the bottom 28%. Okay, so to sum up here my take on Royal Caribbean Cruises, I think that when we look at the theme, this is definitively one of those themes that benefit a lot when there is a rebound in optimism. But it is also one of those that will start to deteriorate faster than the others, because this is very discretionary spending. And whenever you want to put on a position on any security, you need to think about risk reward. Is it a high reward situation for the bulls or for the bears? High risk for the bulls or for the bears? Looking at the seasonality, that was 50-50. Looking at the charts, I think we could make a strong case that this is a high risk situation here for the bulls. So even though they have been rallying a bit, even recently, it's at a very high level. We tested levels that was back, to 2015, when the situation was definitively orders of magnitude more bullish for cruise lines than what we have now. That's the technicals. Looking at the fundamentals, you could make a very strong case. I mean, Saks was absolutely doom and gloom. We have seen a plethora of downgrades from the analysts. Hence, taking the evidence together at these levels, that's the key thing. At this price for this stock, it is much easier to make a bearish case than a bullish one. Looking years into the future, given the very high level we are at, there is also the risk of downside simply because of that. Looking at the shorter time frame, I think the evidence is a bit too clear that this is risky for bulls.